years and years ago, I think it was 2006 or something, I interviewed Jeff Christian of CPM Group because I believed that the Hunt brothers were not responsible for driving. I'd say gold hit $50 in 1980 and people, oh yeah, that was the Hunt brothers just trying to corner the market on gold and they drove it up. No, the Hunt brothers were actually seriously concerned about the dollar's potential demise because we almost lost the US dollar in 1980, and a lot of people, almost nobody realizes that. And it was Paul Volcker coming in the commodities exchange, constantly changing the rules on them, trying to smash silver down. I believe that the Hunt brothers were the scapegoats, the people that were used to cap the gold price by changing the rules to liquidation orders only on silver in January of 1980, where you could not open up a brand new commodities contract. You could only close out old ones. That's a rule that says until this rule is lifted, the price of silver can only go down. What they were trying to do was stop gold's runaway because it was in a runaway. And in a runaway, gold can cause fiat currencies to fail. And so they had to get a handle on this. This is the reason they raised interest rates so high, was to get debt outperforming inflation once again, because inflation, all debt was losing value compared to inflation. So you weren't making gains on bonds. They were called certificates of confiscation. But with gold in a runaway, silver is a minuscule market. When I did my book, it was the trading that goes on in silver in a day compared to gold. Silver was 1/300th the size of the gold market back then. Mm-hmm. So it's much easier to manipulate the silver market than it is the gold market. And by changing the rules on silver while gold was in a runaway, and silver was also in a runaway, but it was the common man that actually caused this, him changing his preference from gold to silver, that caused the gold-silver ratio to change and silver to just skyrocket. By changing the rules to liquidation orders only, there's all these people that trade both gold and silver. When you go to the commodities exchange back then, it was what they call pits, or circles of guys screaming and doing hand signals at one another. And they're all, the silver pit is right next to the gold pit. And so don't you think that the gold traders are saying, boy, if they can do that to silver, we're next. And so it's time to sell gold, because the very next day, gold peaked and fell. As soon as they capped silver, gold peaked and fell the very next day. And so I believe that, and when I interviewed Jeff Christian from CPM Group years and years ago, more than a decade ago, I told him this, and he goes, yeah, the Hunt brothers added 50, maybe 75 cents at the most to the silver price. And so it was really the public changing their preference. And I believe that will happen again somewhere around $3,000 to $5,000 an ounce. The public is going to say, wow, gold was only $250 an ounce back in the year 2000, and it's hitting $5,000 an ounce. That seems awful expensive. Silver is still dirt cheap at $50. So I'm going to buy silver. And I really think that I do think that there's this potential that you could see even a 10-to-1 ratio with gold at 5,000. So that's $500 silver. Is it going to go there? I don't know. I don't have any idea, and I don't want to, stake my reputation and everything else on that. But I do believe triple-digit silver is absolutely in the cards, and I believe that these things are a certainty. It's those long-term charts playing out. It's the public rushing toward other stuff that's popular and forgetting about gold, and especially for silver. I mean, it's just not in anybody's memory, even though it is the most commonly used form of real money. But even when you measure it against all of the currencies, more stuff has been bought and sold throughout the centuries in silver than anything else. And so there's going to come a day where people rush back to it. Will it become a predominant currency once again? I don't know. I doubt it. But when you look at the mine supply statistics, in an economic downturn like this, all of that, that 60% that you're talking about, that supply goes away because they stop mining copper and zinc and lead. And so just when everybody wants it is when there isn't any of new stuff available. That, I think, is what's really exciting about silver. And it's going to cause a super spike in silver. And so we've got some exciting times coming. This will be great.